Stocks close mixed on Wall Street even as the Nasdaq surges to a record high led by a big move in Nvidia. Asian markets trade largely lower while the GIFT Nifty is also suggesting a lower start for the Indian markets. Crude prices rise ahead of the OPEC Plus meet on Sunday. Brent gains over 1% to trade above $84 a barrel while gold prices edge higher as the dollar index cools off. Hindalco's U.S. subsidiary Novelis files for an IPO on Wall Street, hopes to raise nearly $1 billion through the same, valuing the company at $12.6 billion. Operational performance and debt reduction will be the key to track as Tata Steel reports its fourth quarter numbers today. From the broader markets, watch out for numbers from Mazagon Dock, Bata, Cummins and Alchem Laboratories. And as an intense heat wave sweeps across North India, Delhi sees its record highest temperature at 49.9 degrees Celsius, 9 degrees above normal at this time of the year. The IMD has also issued a red alert warning for Rajasthan, Punjab, Haryana and Gujarat. And amidst this intense heat wave, we are back with another edition of Power Breakfast on CNBC TV 18 in the Mumbai News Center. I am Hormus Patakia. Let's first take a look at how the Asian markets have opened this morning, and it's a slightly mixed to negative start across the Asia Pacific as we speak. The Hang Seng continues its streak of underperformance. It's down over 1.5% at the start of the day. The Taiwanese index is also trading with cuts of 0.5%. The Japanese and the Korean indices were also trading lower at the start of the trading session. So negative cues coming in there from Asia. Australia reported its inflation figures for the month of April, where the inflation rose 3.5% on a year-on-year basis, which was the highest in 5 years. So negative cues coming in there from the Asia Pacific. Pull up the GIFT Nifty as well, and that was also indicating a gap down start for our own markets. The implied open suggesting a 100-point downtick as we speak. So not good going for the Asia Pacific, and an implied open also suggesting a negative start for Indian equities as well. But from there we move to Wall Street, which was back in action after Monday's holiday, and it was a mixed session there with the Nasdaq closing at a record high above the mark of 17,000 for the first time ever, fueled by who else but Nvidia. The 7% rally in those shares there. S&P 500 ended marginally higher while the Dow Jones was dragged 200 points lower by the healthcare sector stocks. The US 10-year Treasury note jumped 5 basis points to 4.67%, pushing stocks lower. CNBC's Kate Rogers gets us a wrap of all the action on Wall Street.
U.S. markets were mixed across the major indices as the Nasdaq hit a new milestone on tech gains and the Dow fell on health sector losses. The Dow shed 217 points. The S&P 500 was up 1. The tech-heavy Nasdaq, which closed above 17,000 for the first time, added 99. Ryan Salem, a former top lieutenant of FTX founder Sam Bankman-Fried, sentenced to 7.5 years in prison today and ordered to pay more than $11 million after pleading guilty to conspiracy and fraud charges. Bankman-Fried was sentenced to 25 years in March after being found guilty of stealing more than $8 billion in customer funds. Salem is the first of several members of Bankman-Fried's executive team to be sentenced. And Porsche revealed its first ever 911 hybrid sports car today. The automaker says the new Carrera GTS can accelerate faster than the previous non-hybrid version and can reach a top speed of 194 miles per hour. The car starts at about $165,000. If you want the convertible version, it will cost $178,000. Deliveries are expected to begin by the end of the year. That's what's happening here in the U.S. Back to you in Mumbai.
And the Fed needs more time to assess where the economy is headed, and that is according to Neil Kashkari, the Minneapolis Federal Reserve president. He also said that they are confident that they have the right tools to get inflation down. Let's listen to what he had to say.
In the beginning of this year, as Chairman Powell said, it has moved sideways, and that's raised questions in my mind. Is the disinflationary process continuing, or are we landing to more of a 3% inflation level? I think it's still too early to know, and we need to wait and see to get more confidence. What's unclear to me is maybe some of the dynamics of the reopening of the economy has raised what I call the neutral rate, or what we call the neutral rate, the policy stance that is the minimum level that we need to get to where we're not stimulating or restraining the economy. If that neutral rate has gone up in the short run, then that means the policy would need to be even higher in order to get the inflation back down to 2%. That's very unknown right now. It's very hard to judge that in real time. And so I think we just need to take more time to assess where the economy is headed. I don't think we should rule anything out at this point. We are all committed to getting inflation all the way back down to our 2% target. The most recent inflation print that we got on the CPI data was marginally better than the earlier prints from the first 3 months, but still not where we need it to get to. So it wasn't getting worse, but we just need to wait and see. I think right now we're in a good position because the labor market remains strong in the U.S., so we have the luxury of being able to sit here until we gain confidence on where inflation is headed. Many more months of positive inflation data, I think, to give me confidence that it's appropriate to dial back. You know, the U.S. economy has remained remarkably resilient. GDP growth has been strong, much stronger than forecast. Most people thought that we'd be in a recession toward the end of last year. That didn't happen. Instead, we had very strong growth. U.S. consumers have remained remarkably resilient. The housing market has remained resilient. So I'm not seeing the need to hurry and do rate cuts. I think we should take our time and
moving across the Atlantic to the European markets now, and it was a weak day of trade for them as well. The French CAC slipped about 75 points. The German DAX lost about 100 points, while the British FTSE also settled with losses of over 60 points. The Pan-European Stock 600 closed over 0.5% lower, marking its biggest single-day drop in a month. Now, as investors await next week's ECB decision, a survey by the central bank showed consumers in the region lowered their inflation expectations last month to the lowest since the September of 2021. Wholesale prices in Germany dropped 1.8% in April on a year-on-year basis. That is the softest drop since August of last year. And the markets will track the Eurozone inflation print due on Friday, along with the consumer price data from Germany, France and Spain. So cues coming in there from the European markets as well. But that's the wrap we have on the global market front. But how will all of these overnight cues impact our own markets? We have our research team joining in with the trade setup, the stocks that are likely to be in news and the F&O setup this morning. I'll first tell you about the markets and the cues that you need to watch out for this morning. It's become a bit of a trend for the Nifty over the last 3 trading sessions. We made new highs on Friday, on Monday, but failed to sustain above that. And there you can see they're making intraday highs, but closing in the red. And that is exactly what happened. And that was absent on Tuesday because we failed to make a new high. We even failed to cross 23,000 on Tuesday and ended lower below the 22,900 mark and close to the lowest point of the day. So that is something that will not please the bulls. Now, institutional flows will show you otherwise because the FII, DI buying both was a positive figure, but that is also because of the 5 block deals that took place in yesterday's trading session. So we need to keep that at the back of our minds as well. What is another factor of concern as the expiry and the exit polls date draw closer is the volatility is increasing. The VIX crossed the mark of 24 in yesterday's trading session, another 4% higher there for the VIX as well. Now, on Monday, when the Nifty was struggling, at least there was some comfort for the fact that the Nifty Bank, the broader markets, all of them were doing well. But even they got swept under the selling pressure yesterday. Both mid-cap and the small-cap indices were underperformers. And when that happens, the high-flying sectors usually take a beating. And as you can see, the real estate, PSU banks, the non-banking PSUs, all of them were the biggest underperformers in yesterday's trading session. And vice versa also, that happens when the market turns. They are the ones that lead the moves as well. Now, there are stocks like Aditya Birla Fashion, IRCTC, NBCC will react to earnings, plenty of earnings today as well. And as we spoke earlier in the show, the GIFT Nifty is suggesting a gap down start for our own markets as well. Now we head over to Sudarshan, who would list out the plenty of stocks that you need to watch out for in today's trading session. Sudarshan, good morning.
Good morning, Harmas. So first I'll start with Hindalco as Novelis has announced IPO roadshow for its NYSE listing and price range is $18 to $21 per share and total dilution is seen at 7.5% equity and Hindalco is likely to receive 6,700 to almost 7,800 crore from this and Novelis is valued at 7.228x EV to EBITDA, which is higher than street estimates. Coming to Reliance Industries, company has signed one-year deal with Russia's Rosneft to buy at least 3 million barrels of oil per month in Russian currency. Next is PNB Housing. Block deals of 2.7% equity is likely today and Asia Opportunities and General Atlantic Singapore will likely be sellers and floor prices for this is likely at rupees 717 per share, which is at a discount of 5% to closing price of yesterday's. Now coming to all the earnings, first we'll start with IRCTC. It was operationally mixed Q4. Healthy revenue growth, but margin across the segments has dipped. Overall revenue was up 21%, but margin is fallen 220 bips year-on-year. biggest segment, that is internet ticketing, for this margin has fallen almost 800 bips if you compare with the same quarter last year. Coming to AB Fashion, loss is widened, but operationally there is an improvement in earnings. Revenue is up 18%, EBITDA has increased 47%. Madura Fashion's EBIT has increased 3 times year-on-year, but Pantaloons and Ethnic continue to report EBIT loss. Coming to GNFC, there is a sharp fall in headline numbers. EBITDA has fallen 61%, margin has slipped almost 1000 bips year-on-year. Chemical business EBIT has dropped 70%, and fertilizer segment continues to report EBIT loss. NBCC, it was a healthy Q4 led by PMC segment, which is known as Project Management Consultancy, which formed 91% of revenue in Q4, and PMC business revenue was up 47% year-on-year. Last is MedPlus. Earnings have improved year-on-year, revenue is up 19%, and EBITDA has risen 30% against the same quarter last year.
Final leg of the earnings season, plenty of reactions to watch out for. Sudarshan, thanks a lot for that. And lastly, Mangalam is joining in cues from the F&O space. Mangalam, FIIs have now turned net long, but that is not reflecting on the index whatsoever.
Well, it doesn't matter because over the last 5 days, we've already seen a big move, irrespective of the volatility that we're seeing. You know, yesterday was one of those instances, for instance, where the frontline indices, all of them ended at the low point of the trading session. But, you know, if you account for or if you take that away, in the last 5 trading sessions from last Tuesday's close to now, the Nifty is up 1.5%. The Nifty Bank's up 2.2%. So nothing really to worry out there for the market as well. It is the Nifty Bank monthly expiry today. So that's something we will keep an eye out on in particular. And what's also doing well for the markets are not only FIs buying in index futures, but cash markets as well. There has been net institutional positive flows. So yesterday the FIs bought just about 66 crores. So the good part is that DI has bought 32 crores, and that's reflecting in the positive moves, positive flows that we saw in the cash market. And they've turned vociferously long in index futures. I mean, yesterday there was purchase of another 2,000 crores, 10,000 long contracts added, 15,000 short contracts covered. And as a result of which, the chart that we've been talking about regularly, we've been tracking for the last 5 days from 31% all the way up to 54%. And the net long exposure has gone up to 47,000 itself. The Nifty Bank that I spoke about will be extremely crucial today. Active options on the Nifty Bank are both 48,200 call as well as the 49,200 call and the 49,100 put, telling you that the option writers are positioned for a 48,900 to 49,350 sort of range on the Nifty Bank itself. The GIFT Nifty indicates a 100-point downtick, and that will be extremely crucial to watch out for, largely because the 22,900 put on the Nifty is extremely active, making 22,800 the first leg of support for the Nifty itself. On the way up, 23,000 call, of course, is equally active as well. Watching out for a couple of stocks. Everyone spoke about ABFRL and their results. It's entered F&O ban today. And also GNFC has exited F&O ban. So those are a bunch of stocks that we'll be watching out for.
Mangalam, thanks a lot for that. Some important levels to track for the index as we draw closer to expiry. But time for a short break. On Power Breakfast, up next, Hindalco's US subsidiary Novelis has filed for an IPO on Wall Street. More details on the other side. Stay tuned. We'll be right back. Back with us on Power Breakfast. Now, in a first large US listing by an Indian-owned company, Aditya Birla Group's Hindalco is set to raise $1 billion from the Novelis IPO, valued at over $12.5 billion for its NYSE listing. Nisha Poddar is joining us with more. Nisha, over to you.
In what could be the largest first US listing by an India-owned company, well, Aditya Birla Group's flagship company, Hindalco's wholly owned subsidiary Novelis, it has kick-started its IPO process with the investor roadshows for an NYSE listing. Hindalco is the parent company and Novelis is the wholly owned subsidiary, and therefore, the whole IPO is offer for sale, and therefore close to $1 billion is what Hindalco could be raising from this particular IPO. Also important to note, as per the filing of the fundraise details, well, $12.6 billion is the IPO valuation for Novelis as per estimates on the higher side of the price band. Price band is 18 to 21 dollars per share, which means about 800 to 900 million dollars can be raised. And with the green shoe option, it can be raised close to $1 billion for Hindalco through this particular IPO process. One more important thing to note is that Hindalco will own, post this particular IPO process, close to about 91.5 to 92.5% stake. In terms of the impact on India-listed company Hindalco, first is the fundraise of close to $1 billion. Second, the valuation impact, because Hindalco is trading at about $18 billion. And with Novelis, with a valuation of $12.6 billion, it will impact the SOTP valuation of Hindalco, which generally the brokerages have been estimating about 2/3 of Hindalco's value coming from Novelis. And third, the fundraising ability for Hindalco will improve with the equity fundraising, and also in future they can take more debt for furthering their future capex plans.
Nisha, thanks a lot for that. Time for a short break here on Power Breakfast. Up next, we get you cues from the commodity space. Stay tuned. Back on the other side. Back with us on Power Breakfast, and we continue to watch developments around West Asia, where Israeli tanks reached the city center of Rafah in Gaza for the first time, defying international pressure to stop an offensive there. The move comes after an Israeli airstrike on a tent camp in that area that killed at least 45 displaced civilians who were sheltering there. NBC's Raf Sanchez reports.
An NBC News crew inside of Gaza confirms that Israeli tanks have now pushed into the very heart of Rafah. That's an indication Israel has no intention of slowing down its military offensive just days after that deadly and disastrous strike on a camp for displaced people, which killed at least 45. That's according to the emergency services in Hamas-run Gaza. We are starting to learn new details of Israel's preliminary investigation into that strike. The IDF says they dropped 2 precise bombs on a structure where senior Hamas leaders were meeting, but that the explosion caused something else to ignite in a neighboring structure. That caused that firestorm, which just ripped through the camp, people sleeping in tents made of woods and of plastic, those tents going up in just a matter of seconds. Now, the White House calling those images heartbreaking, saying Israel has the right to pursue Hamas, but that it must protect civilians. We're also learning that the U.S. military has been forced to suspend delivery of aid into Gaza by sea after its temporary pier was damaged in heavy seas. That's according to a U.S. official, a UN official, and an Israeli official. The UN official tells us it could be up to a week before that temporary pier system is repaired, before aid can be flowing in again. And this is just the latest setback for the American aid operation. A U.S. service member is in critical condition in hospital here in Israel after suffering a non-combat injury on the pier last week.
Some images there coming in from Rafah, not good sights. But Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. What are you picking up?
Harmas, well, the renewed geopolitical unrest in Middle East, and especially with what's happening between Israel and Rafah, has clearly led to some premium in many of these commodities. So I'll start with the crude oil prices, which are now trading at a 4-week highs. We are holding above $84 a barrel now. The gains in prices have come in with the uncertainty now in Middle East and fear of escalation of concerns there. Apart from that, it also is the U.S. summer demand season. Well, we've just done a long weekend, and the expectation is that what the numbers we're looking at is the highest in a couple of decades. I mean, that's the kind of driving that the U.S. markets could be looking at in this season. Apart from that, it is going to be the OPEC and allies meeting on 2nd of June, where they are discussing output policy with an expectation that you could see the 2.2 million barrels per day of a cut continuing beyond beyond June as well. It also has to do with the U.S. inventory data. Well, that comes in today with an expectation that you could be looking at a decline in numbers also is supportive. And then a very interesting UBS report which says that they expect the crude oil prices to gain on from here, and they also are looking at healthy oil demand globally, expecting an expansion of 1.5 million barrels. Good gains is what we also are looking at in metals. Silver is trading at 11-year highs. Copper price is trading firm as well. So most of the commodities doing well again in Asia.
Manisha, thanks a lot for all of those updates. Now, as traders look ahead to the OPEC Plus meeting scheduled this weekend, let's listen in to what Francisco Blanc, the head of commodities research at BofA Securities, expects from the meet and also get his take on the recent copper rally.
I think OPEC is going to extend the cuts into the second half of the year. That's the most likely outcome of the upcoming meeting. They are, however, quite bullish on demand for oil, and that's perhaps a bit of a surprise. I mean, they are at 2.4 million barrels a day in terms of their demand growth expectations for 2024, compared to the International Energy Agency, which sets itself at the other end of the spectrum at around just 1.1. Remember, the base is about 100 million barrels a day. So OPEC is constructive on demand. They will likely keep the cuts and expect that prices lift a little higher. The issue, I think, with copper right now is that it's moved a little ahead of fundamentals. Remember that consumption growth is weak, given the fact that, yes, we're looking at potentially positive data points, but PMIs globally are soft on the manufacturing front. We're also seeing weak industrial activity in many countries, limited trade. So I think as producers around the world, as manufacturers, rebuild their inventories of raw materials and intermediate goods, we will see a run-up in industrial metals, and copper will be a big beneficiary.
On to some weather updates now. Northwest and central India are reeling under scorching heat. New Delhi recorded the highest temperature yesterday, with the mercury touching nearly 50 degrees Celsius, 9 degrees above normal for this time of the year. Uttar Pradesh, Haryana, Rajasthan and Punjab also experienced extreme temperatures. The Met Department has issued a red alert in several states in North India, including Delhi. The weather department said that the extreme temperatures and heatwave conditions are expected to gradually decrease from the 30th of May. Before we wind up, some flashes there on your screen. The IMF has raised the 2024 GDP forecast for China to 5% from 4.6% there. So some positive news from China. We'll see if that has an impact on the Asian markets. But with that, it's a wrap on this edition of Power Breakfast. From me and the team that put this show together, thank you so much for watching. Bazaar Morning Call takes the action forward.